Okay, happy Thursday. So we're going to start talking about Chapter 2 today. A lot of Chapter 2 is centered around the Fair Labor Standards Act, the protections that act offers, as well as the benefits that it offers, as well as the requirements of employers to follow it. So let's get started here. You do have homework due tonight, Chapter 1. So hopefully you're well on your way to getting that finished. It's due, I think it's 11:55 is when it cuts off. So these are objectives that we're going to talk about in this particular chapter. We're going to talk about the major provisions of the Fair Labor Standards Act, which there are 4 major provisions of it. It covers, it provides overtime protections. It provides minimum wage protection, child labor law protections, as well as record-keeping requirements on employers. We're going to talk about, and within that, we need to define, we're going to spend a lot of time defining exactly what an employee is, because the Fair Labor Standards Act only applies to individuals who are considered employees. Okay. So we have to define what an employee is for purposes of the Fair Labor Standards Act, because like I said, it only applies to individuals who are employees, not to individuals who are not considered to be employees. And a worker could be an employee or not. So we're going to go through and define that. We're also going to look at what exactly is considered hours worked. So we have to go through that definition of what is work time, what's included in work time, what isn't included in work time, because not necessarily every minute that an employee spends on premises is time that they have worked. And so we want to look through and define what that is. We're going to look at the records that we use to collect payroll data, different types of records for that. We're going to start to get into some calculations. Not today, sorry. Probably starting next Tuesday, start to get into some calculations of regular and overtime pay, how we do those calculations. And we're going to also talk about some different types of compensation plans. So we're normally familiar with being paid on an hourly basis, so individuals who are paid for their time, or being paid on a salaried basis, individuals who are paid for a job, and it's not necessarily dependent upon the time that they spend at that job. But there are other types of ways that individuals are compensated. So we're going to go through those different types of compensation plans as well. And that pretty much sums up what we're going to do here in Chapter 2. We've got, I think, 5 days. 1, 2, 3, 4. Yeah, we got like 5 days, 4.5 days scheduled. Maybe we'll get into Chapter 3 a little bit toward the end. On the last day if we've got time. But we had a lot of calculations to go through in this chapter. And so hopefully that will satisfy your need to do math. All right. Okay, so recall the Fair Labor Standards Act was enacted in the 30s during the Great Depression, and it was in response to things that were happening in society, and it was provided to help bring in some protections for employees, because before that time there really weren't any protections. You weren't paid for time over 40 hours during the week, which we just kind of think of it as second nature that we get paid overtime if we work more than 40 hours in a week. There was no minimum wage that was established, so employers would pay whatever it is that they felt that the job was worth. And so this Fair Labor Standards Act, which is oftentimes referred to as wage and hour law, because it has to do with mainly the minimum wage and overtime hours. So it was brought into effect in the 30s in order to address those those issues that were brought up with the Great Depression. Now, not every employee is covered by the Fair Labor Standards Act, by the protection. When I say covered, I mean protected by. The vast majority of employees are, and you'll see when we go through this 2 different ways that employees can be covered by those protections, that in the law, it appears that not everybody would be protected, but in practice, virtually every employee is protected by it. So there are 2 different bases of coverage under the FLSA. One is called enterprise coverage. And you're going to want to remember these, by the way, the difference between the 2 and kind of the definition of them. So enterprise coverage means that everybody in the enterprise, because of the activities of the enterprise, is covered, is protected by the FLSA. So in order to have everybody protected in the enterprise, what we have to have is 2 or more individuals, employees, that are working in interstate commerce or producing goods for interstate commerce. So again, we're going back to interstate commerce because remember, the federal government really doesn't have jurisdiction unless the commerce passes between state lines. So if you have 2 or more employees working in interstate commerce or producing goods for interstate commerce, super easy to work in interstate commerce. If you have an employee that takes a credit card and swipes it, processes that transaction is going across state lines. So that's engaging in interstate commerce. Sending an email, making a phone call across state lines. It's very, very easy to engage in interstate commerce and you don't even know that you're doing it. Okay? So, but you have to have 2 or more employees doing that. And the business has to have at least $500,000 of annual gross sales. Well, that would exclude a lot of businesses. And we're talking about gross sales, not net income, but gross sales. So total amount taken in by the business, $500,000. I mean, that's, most mom and pop type businesses aren't probably bringing in $500,000 of annual gross sales. So you have to meet both of these criteria in order for every employee to be covered within the enterprise, within that company. Now, there's also, if an enterprise is not covered, it is possible for individual employees to be covered within that enterprise. And that happens when the individual is in a fringe occupation closely related and directly essential to the production of goods for interstate commerce. So again, you may not have enterprise coverage. Let's say we've got a mom and pop grocery store. They're bringing in $200,000 of annual gross sales. So as an enterprise, they don't meet that requirement. But if they have an employee who is placing orders for goods, and those goods are coming from someplace outside of Iowa, they're engaged in interstate commerce. If they have a bookkeeper that keeps the books for those employees that are ordering, that would be a job that is closely related to interstate commerce. They would also be then a covered individual. That employee that's swiping the credit card, taking that transaction that's going across state lines, that individual is engaged in interstate commerce. So you can see how, even though not everybody would necessarily, by definition, not everybody would fall under these categories. However, in practice, almost everybody would. In this day and age, almost everybody would. Now, back in the 40s, maybe not so much. But now, almost everybody is. You get online, you're engaging in interstate commerce, right? So even though individual employees may not be employed by an enterprise that meets those requirements, chances are, as an individual employee, they're going to be covered by the protections of the FLSA. Now, there's this third category as well of entities that are covered, and they're covered regardless. Nonprofit entities, hospitals, schools, governmental agencies, those employees are just automatically covered, but those are nonprofit types of organizations, so they're not involved in sales. So this sales they're not going to necessarily meet this sales requirement, but they're automatically covered. Their employees are automatically covered under the FLSA. So again, two main ways: enterprise coverage or individual coverage, or your what they call a named enterprise, which would be the nonprofit or governmental type entity. So this would mean those employees are then covered. All right, so what's an employee? We have to define what an employee is, because not every worker is an employee, and only employees are covered by the protections of the FLSA. I'll tell you, sometimes it's kind of difficult to actually define it because there's a lot of gray area. Especially nowadays, people's jobs are, they're not clearly defined what they're doing. But there is this 6-factor economic reality test that is used to help determine whether somebody is an employee or not. And generally speaking, if they're not an employee, they're what we would call an independent contractor or a self-employed individual. That's oftentimes what we think of. They're self-employed. They don't have an employer. So, real quick definition of what an employer is essentially it's any entity that has employees. If you have employees, you're an employer. Okay, so now we've got to define what exactly an employee is. So let's go through this 6-factor test. And I'm going to go through, I've got some other documents up on the daily agenda that can also help to clarify some of this that we'll go through. So 6-factor test. Is there the opportunity for profit or loss? If you're an employee, generally, you do not have the opportunity for a loss. You're making money with your wages, but that's really not the same as a profit. But you're also not going to encounter any loss. Now, nowadays, the way, as much as things cost, as much as gases cost and all the other expenses, you may be getting kind of close to experiencing what would be called a loss. But, from an economic standpoint, it's not considered a loss for an employee to spend more money on housing, gas, food, all of that kind of stuff than they receive in wages. That's not considered a loss. A loss would be if the entity itself is expending more to create the income than the income that they're actually creating. So if there is no opportunity for profit or loss, then more likely than not, the individual would be considered an employee. If there is the opportunity for a profit and loss, then it's likely that they would be considered an independent contractor and they would not be an employee. And like I said, we're going to go through one of the forms that I have is going to provide an even better, more in-depth definition of that. Investments by worker and employer. So let's say you're a bookkeeper and you are considered to be an employee. If you're considered to be an employee, then chances are your employer is providing you with the tools that you need in order to do your job. They're providing you with the computer. They're providing you with the software. They're providing you with the printer, whatever other tools you need in order to perform that work. If you're an independent contractor, however, you have to provide that stuff yourself. By provide, I mean you have to pay for it, right? Which feeds into the profit and loss, right? If you're now spending money in order to do the work, then you're going to experience either a profit or loss depending upon, what those two factors are. So if investments by workers, if there's no investment, personal investment in the tools, then chances are you're an employee. If there is a personal investment, you have to spend your own money in order to get the tools to do the work, then chances are you're not an employee and would be then self-employed or an independent contractor. Third factor, permanence of the work relationship. If the relationship between the worker and the company is on a permanent or continuous ongoing basis, and by that I do not mean that you're entitled to have your job forever, but the assumption is that unless, something changes, you're going to continue to work for this employer, then chances are that that you are an employee. If, however, the relationship is temporary, so example, again, let's go back to the bookkeeping example. If you are an independent contractor and you get clients that hire you to do their bookkeeping work, but it's on a month-by-month basis, right? They hired you this month to balance their books, to provide a profit and loss statement for them for all that stuff that they needed. Chances are they're going to hire you next month, but they don't have to hire you next month. If they're not happy with you, they can say they're going to go somewhere else. Then that would be a temporary type of position. So chances are in that circumstance, you'd be an independent contractor and not an employee. This fourth one, this is a big one. I mean, they're all big, but the nature and degree of control over the work being performed. Who controls when, got it? Okay. Who controls when, where, how the work is being performed, for whom the work is being performed, so who the clients are, and who controls how much money is being made by the worker. So if you are an employee, the chances are greater that your employer is controlling those items. If you are an employee, as far as how much money you're making, what usually happens is an employer says, we're hiring for a bookkeeper, we're paying $20 an hour, we're going to interview people, that person's going to come in, work 9 to 5, this is going to be their workstation, they're going to use the equipment we gave them, we're going to tell them who the clients are that they're working on, we're going to control the circumstances under which they do the work. So if that is the case, and like I said, we're going to decide how much they make, then chances are they're an employee, right? If, however, our example of the bookkeeper, let's say you're a bookkeeper and you provide this service to a company and you tell the company, look, I'm going to do this work for you, but I'm going to charge $20 an hour. I'm going to commit to doing this work. It may take me 5 hours to do the work. It may take me 12 hours to do the work. You're going to pay me, what it is that it takes me in order to do the work. I'm going to do the work at my house. I'm going to use my equipment. I'm choosing you as a client. I have control over when, where, how that work is done, who my clients are, how much I'm getting paid. Now, they may decide not to hire me, in which case I'm getting paid nothing, but I'm deciding what my rate is. In that case, I'm not an employee. Chances are I'm an independent contractor. Number 5, centrality of the work to the business of the employer. So how integral is the work to the employer? If the worker didn't provide these services, would we be able to continue? So again, as a bookkeeper, actually, not the example I want to use. Let's use a janitor as an example. So that same CPA firm hires a janitor to come in and clean after hours, so that, empty the trash and clean down the surfaces and everything like that. That work is not really integral to our business. We could continue to be a CPA firm if we didn't hire somebody to do that. Now, it might be a CPA firm that clients don't want to come to if we don't keep it clean. However, it's not integral to the business itself, right? It's kind of ancillary to the business. Whereas, if the work, so that's an example of somebody who's not an employee, would be one factor to indicate that they're not an employee. If, however, that bookkeeper, that is central to our business, we can't be a CPA firm if we don't have somebody to help keep the books, right, for our clients. So that is a job that is central or integral to the functioning of our business. So that's an example of what they mean. Yeah.
Could there ever be an instance where you can be both?
Employee and independent contractor? You could. So if you are, let's use the bookkeeper and janitor example. So if you are a bookkeeper at that CPA firm and you work during the day, 8 to 5, but you run a side hustle of a cleaning business, and you've contracted with the same CPA firm to provide that business, that work, then for that work, you're probably a contractor. So for the day work, you're an employee, but then for the night work, you're a contractor. So yes, it is absolutely possible for the same person to have two different roles under two different circumstances. That's a great question. The last one here, how much workers can use their skill and initiative. Now again, this can be kind of difficult to define what we mean by this, but for an employee, skill and initiative isn't necessarily required. So if I hire an employee, I may be committing to providing them with the skills that are necessary, the training that's necessary in order for them to do the job, right? Usually kids, when they first start working, maybe they go work for Fairway, they've never worked anywhere before, they have absolutely no skills whatsoever. They have absolutely no skills whatsoever. A lot of times at that age, they also don't have a whole lot of initiative. But the employer is going to provide that for them, right? They're going to provide them the skill, and then that initiative, they may or may not attain that initiative or not. If they don't, they'll probably get fired, but it's not required in order to continue the business. For an independent contractor, they come with those skills. You're not going to market yourself as a bookkeeper unless you already have the skills of a bookkeeper. You also have the initiative that's required. You've got to be the one to generate the business. You've got to be the one to go out there and continue that. So that as well would indicate that an individual is an independent contractor. Again, this distinction is important because as payroll professionals, we're concerned about employees. We have employees. Employees are the ones that we have to make sure that we are taking care of the employees. Independent contractors, payroll professionals, they may generate payment for them, but independent contractors, people who are not employees, are not protected by the FLSA. And there are a lot of other things that they also don't receive, other types of benefits, which I'll go through here in just a minute. And we're going to go through these in more detail than just what's provided here, but this just kind of gives you a little bit of an overview. No single factor is determinative. And you can think of scenarios where maybe you've got some of these three factors as an employee, but then these three factors as a contractor. It's like, well, what do I do? Which one is it? So there's a lot of gray area with determining whether somebody is an employee or an independent contractor. In most cases, it's pretty clear, but not in all cases. So there are some specific rules as well that apply to employees of corporations, different types of corporations. For domestic workers, so that would be like nannies, housekeepers, that kind of thing. Interns, partners in partnerships, and what's called statutory employees. I don't want you to get too hung up on statutory employees, just generally speaking. They're kind of in this middle ground between an employee and an independent contractor. They're not treated as employees for federal income tax purposes, but they are treated as employees for Social Security and Medicare tax purposes. It's kind of weird. But it's very limited to who these people are. They're direct sellers, and licensed real estate agents are considered to be statutory employees. So as far as domestic workers, so these would include like cooks, as they mentioned here, butlers, caretakers, gardeners. Think If you've ever watched the Brady Bunch, think about Alice in the Brady Bunch. Also, babysitters might be included. If they're an employee, if they are classified as an employee, they have to be protected then by the FLSA. But their definition of whether they're an employee or not is a little bit different. They have to work 8 hours or more per work week in at least one home, or they have to earn at least $2,700 from a single employer in a calendar year. So you can think of a situation where if you hire somebody for the summer to take care of your kids, maybe a nanny, you're probably going to end up paying them more than $2,700. They may be considered an employee, and therefore you may have to pay half of their Social Security and Medicare tax and withhold and do all of that stuff as an individual. So there are a lot of people that actually get caught up in this rule and get in trouble over it. Especially, there have been several politicians, Supreme Court justices that have had their nominations derailed because they didn't do this properly. They had a nanny that they did not treat as an employee when they should have treated them as an employee. And really, when you're a judge that's up for Supreme Court, you probably should know better, or at least hire somebody that can guide you in those rules. But this is an area where there are a lot of violations that occur. If you're a live-in domestic, so again, think Alice from Brady Bunch, you do not have to be paid overtime. You're still considered an employee, but you don't have to be paid overtime because you're there all the time. And then there's this other category, direct care workers. So these would be individuals who provide healthcare services to maybe the elderly or those who are in rehab, but they're in the individual's home. So in the recipient's home. So assistance to the elderly, disabled, they would be considered employees if they work for a third party. So there are a lot of providers of nursing care that will send people out to individuals' homes. So they would be considered employees, but not of the person receiving the care, but of the third party that's actually paying them. Okay. All right. How are we on time? 12:15. Sorry, here. Okay. So here is a video that kind of summarizes some of the stuff that I talked about there.
Employee versus independent contractor, 21st century showing. In today's ever-shifting economy, many job seekers are hesitant to ask too many questions during the interview process, as they don't want to risk losing an employment opportunity. However, job seekers may be doing themselves a disservice by not clarifying whether the position is an employee or an independent contractor position. Whether the prospect will be considered an employee or independent contractor has numerous impacts on various important employment characteristics, such as wages, taxes and withholdings, fringe benefits, behavior and relationships, schedules, and record keeping. First, we need to define employee and independent contractor. Then we can examine the important differences between the classifications and the ramifications that incorrect classifications can have on both the employer and employee. Currently, the federal government has not established a comprehensive statutory scheme to distinguish between employee and independent contractor. Instead, different agencies define the distinction for their own purposes. According to the United States Small Business Association, an employee is defined as someone who performs duties dictated or controlled by others, is given training for work to be done, and works for only one employer. The National Labor Relations Act defines the term employee broadly. Instead of limiting the term employee, it includes anyone not excluded. People excluded as employees include agricultural laborers, those in domestic service of any family or person at his home, those employed by his or her parents or spouses, and anyone with the status of an independent contractor. An independent contractor, on the other hand, is someone who operates under a business name or under his own name, may have his own employees, may maintain a separate business checking account, may advertise his business's services, invoices, or work completed, has more than one client, has his own tools, sets his own hours, and keeps business records. The IRS defines a person as an independent contractor if the payer has the right to control or direct only the result of the work, and not what will be done and how it will be done. Some states have defined these terms and addressed the problematic overlap of definitions by providing guidance using a classification test. For example, in New Mexico, an individual is classified as an independent contractor if he meets all of the following standards. 1. He provides labor or services free from direction and control over the means and manner of providing labor or services. 2. He obtains business registrations or licenses required by state law or local ordinance. 3. He provides labor or services and furnishes the tools or equipment necessary to provide the labor or services. 4. He retains the authority to hire and fire employees to perform the labor or services. 5. He receives payment for labor or services on completion of the performance of specific portions of a project or is made on the basis of a periodic retainer. And 6. He represents to the public that the labor or services are to be provided by an independently established business. Essentially, employees get paid for work under direct supervision of an employer, while independent contractors take on a job for a price, decide how the work will be done, and decide if it is necessary to hire others to help do the work. But there are many practical differences between employing an employee and independent contractor. Taxes. The issue of withholding taxes is critical to this dichotomy. It is the responsibility of the employer to withhold an employee's federal and state income tax. The employer is also required to pay the withheld taxes to the IRS and any applicable state agencies. People working as independent contractors, on the other hand, must pay their own income taxes, and the employers, in most cases, need not withhold the taxes. Social Security and unemployment. A second distinction between employees and independent contractors concerns Social Security and unemployment insurance. In most cases, employers are required to make payments into Social Security and unemployment insurance on behalf of employees. Independent contractors make their own contributions to Social Security. An employee also need not purchase unemployment insurance for independent contractors because the independent contractor is viewed as self-employed. Healthcare and retirement benefits. When employers offer certain retirement plans, those employers must make the retirement accounts available to all employees. Unlike employees, independent contractors are not due any sort of contribution toward a retirement plan or account. Other fringe benefits, such as healthcare coverage, vacation time, and sick leave, are similar to retirement plans. These benefits are available to employees under myriads of federal laws and regulations, but not to independent contractors. The current patchwork of laws across the United States makes it difficult for individuals and potential employers to differentiate between independent contractors and employees. Clarifying this confusion is important because of the harm mistakes may inflict on both workers and employers. Some of the harms caused by incorrect classification include employees may lose employment benefits such as health insurance, sick days, overtime, and retirement benefits if misclassified. Employees and prospective employees may lose protections afforded under occupational safety laws and anti-discrimination safeguards. Competing businesses and taxpayers may be forced to pay, for example, emergency medical costs or welfare for uninsured employees who, by right, should have been covered under employer health insurance plans or unemployment insurance. Misclassification also has legal and punitive consequences for employers under both federal and state law. First, if an employer misclassifies an individual as an independent contractor instead of employee, the employer may be required to reimburse the employee for wages that should have been paid under the Fair Labor Standards Act, including overtime and minimum wage. Second, an employer will have to pay back taxes and penalties for state and federal income tax withholding that should have been paid to the government. Third, an employer can be required to make Social Security and Medicare payments that should have been made. Fourth, the employer will have to provide the incorrectly classified individual with employee benefits such as health insurance and retirement benefits. Finally, many states now impose criminal penalties such as job seeker may hesitate to do so. One issue that must be clarified in the hiring process is whether a prospective worker will become an employee or independent contractor. Once classified, it is extremely important to understand what that classification means in terms of pay, taxes, benefits, and scheduling. As technology continues to advance, more people are able to work on remote and per project basis. More people find work that falls in the gray areas between employee and independent contractor work. As such, knowledge of this area and understanding its importance is more important than that.
Okay, I didn't quite get through writing this before that was finished. But so we talked about, and we'll go through a little bit more detail, the 6-factor economic reality test. That was what I had written up here, that there has to be to evaluate whether somebody is an employee or an independent contractor. Is there the opportunity for profit or loss? Who is making the investment in the tools that are needed to perform the job? What's the degree of the permanence of that work relationship? Who controls both the why, when, where, how much somebody is making? The extent that the work performed is an integral part of the employer's business, and whether or not there's skill or initiative required in order to perform the services. So what I want to do now is kind of go through the reasons why this distinction is important, other than whether there's protection by the FLSA, because there are other benefits and detriments to each of these classifications. So, and the video talked about most of these. Okay, so if you're an employee, you have taxes withheld from your paycheck. You have federal income taxes withheld, you have state income taxes withheld from your paycheck. So that means that come tax time, you don't have to come up with, hopefully, if enough has been withheld, you don't have to come up with a big chunk of money in order to pay the taxes that are due. If you're an independent contractor, there is no withholding of taxes from your payments. You bill for $1,200 worth of work, you're going to get a check for $1,200. There's nothing that's going to be withheld from that. But what that means, it doesn't mean that you're exempt from tax. Oh no. It means that you're going to be responsible for that payment. The independent contractor is responsible themselves for making the tax payments and making them throughout the year, usually on a quarterly basis, not like on a, there's no like paycheck with an independent contractor that happens on a regular basis. So usually those taxes are sent into the IRS on a quarterly basis. But it's the responsibility of the independent contractor to send those payments in and then to make any ultimate payments at the end of the year. Also, if you're an employee, your employer is going to pay half of your Social Security and Medicare tax. So the 6.2% in Social Security tax and the 1.45% in Medicare tax that everybody pays on their wages, that's only half of the tax that's actually assessed. The employer pays the other half of that tax. A lot of employees aren't aware of that their employer is paying 7.65% of their wages in Social Security and Medicare tax. But if you're an independent contractor, you have to pay 100% of it. So, like I said, this is, can't write today. Social Security tax rate is 6.2%. Medicare tax rate is 1.45%. Add those together, it's 7.65%. That's what 1/2 is. 100% is 15.3%. So as an independent contractor, you've got to pay, in addition to the taxes, federal and state income taxes, you also have to factor in and pay 100% of the Social Security and Medicare taxes that are going to be due. on your income. 15.3%, that's not a small amount. That's a pretty big amount. When you combine it with the income taxes, depending upon what your tax rate is, you can get up to close to 40, 50% of your income now being taken by taxes. But the independent contractor then is responsible for all of those taxes, and they have to pay it, like I said, on a quarterly basis, and then ultimately any amount still due at the end of the year, they've got to pay it. So for an employee, they're eligible for unemployment insurance and workers' comp benefits. So if they lose their job, they can apply for unemployment benefits. Or if they get injured or sick on the job because as a result of their job, they would be eligible for workers' comp benefits. So this is where they'll pay for like the medical expenses, and every employer has to have insurance for that. They pay for the insurance. Employers also pay for unemployment insurance. So these are costs that are borne 100% by the employer when there is an employer-employee relationship. When you're an independent contractor, there's no unemployment, no unemployment benefits, and no workers' comp. So as an independent contractor, you're on the hook. If you all of a sudden can't work because you get sick, you get injured while you're doing the job. Let's say you're a plumber, you're an independent contractor as a plumber, and they spend a lot of time on their knees. And their knees start to go out and they need surgery, and they're going to be off of work for 6 months. Well, they're off of work for 6 months as an independent contractor. They're not going to get any unemployment benefits while they're off work. There's no work, no money. And they're not going to, the workers' comp is not, there's no workers' comp to help pay for the injuries that were sustained on the job. Now, maybe they have health insurance, but that's another thing that they're paying for 100%, is the health insurance.
Question.
Yeah.
If you are independent contractors and you have employees that you can pay insurance into.
Yes. So if you are, and that's a great question as well, if you're an independent contractor, self-employed, you may have employees. You may have, let's say that plumbing business, maybe you hire 2 or 3 other people to do some plumbing work for your clients. They're considered to be employees. You purchase and pay as the employer unemployment and workers' comp for those employees. But if you are self-employed, you yourself are not covered by that. Okay? You yourself as the employer, depending upon how the business is set up, there are some classifications, some organizational structures where you can be considered an employee as an owner. So like as an S corporation, if it's a corporation and you own it generally, then, and you're providing services to the business, then you're also considered to be an employee. But like if it's a partnership, you are not any partners in a partnership. And a partnership is essentially an independent contractor that's more than one person doing it together. That's considered a partnership. Partners in partnerships are considered to be independent contractors. So they have to pay all of their taxes, all of their Social Security, Medicare tax. They're not covered under unemployment or workers' comp as well. Employee benefits. So as an employee, if the employer offers benefits, they don't have to, but if they do, then they have to offer it to all employees. So health insurance, 401k, retirement benefits, all the other, menu of benefits. If you're an employee and they offer benefits, you can partake in that. You may have some portion that you have to pay toward it as an employee, but they have to offer it to you. As an independent contractor, you can get that stuff, but you're going to pay for it 100% yourself. So you're not eligible for any benefits. And if you're an independent contractor and you provide services, let's say I'm a janitor and I'm an independent contractor and DMAC hires me to come in and clean using my janitorial business, I'm not eligible for DMAC benefits because I'm not an employee of DMAC. I have to provide my own benefits if I can. And number 5, which they don't really mention, but I want to mention. So if you're an employee, you're protected by the FLSA. So that your employer has to pay you minimum wage, and they have to pay you overtime for any hours over 40 hours in a week. If you're an hourly, now when we go through the calculations, you're going to see some exceptions to those rules. By the way, in tax, the answer to any tax question is it depends. Okay, so just keep that in mind. It's not, there are exceptions to everything, but as an employee, you're going to be protected. You're going to be eligible for overtime and eligible for minimum wage protections, as well as those child labor protections. The record keeping, of course, that's the employer that has that record keeping requirement. So that's the one requirement of the FLSA. The others are kind of protections. But as an independent contractor, you're not covered by the FLSA, right? So you're not getting your minimum wage or your overtime, but you also have control over how much you're being paid or how much you're offering your services for. So you can decide, okay, well, I don't need the protections of the overtime and minimum wage because I'm charging $30 an hour for my work. So that's fine, that covers me. But if you work over 40 hours in that week, you're not going to get paid time and a half for it as an independent contractor. Okay, so these are some of the benefits that an employee has over an independent contractor. Now, employers get themselves into trouble because they mistakenly misclassify individuals as independent contractors when they should be classified as employees. Now, you can see on this list, you can see why they might want to do that. If I have an independent contractor instead of an employee, I don't have to pay half their Social Security and Medicare tax. I don't have to provide them with unemployment insurance and workers' comp. I don't have to offer them any benefits. I can only have to offer those to my employees. I don't have the responsibility for withholding taxes and then remitting them, right? And I don't have to worry about this FLSA stuff. I don't have to deal with that. Less regulation and more cost savings. Now, yeah, I might have to pay that person a little bit more. Instead of paying them $15 an hour, maybe I'm going to pay them $20 an hour. But that extra $5 an hour is saving me a whole lot of costs and a whole lot of headaches. However, it is not up to the employer to decide whether they're going to classify somebody as an employee or an independent contractor. It all has to do with those facts and circumstances, that six-factor reality test, economic reality test. It all has to do with the facts and circumstances. So, yeah, Regina.
So, is HR responsible for zoning that out? Or
in most organizations, yeah, that would be an HR responsibility. It would not be a payroll responsibility. The payroll, if it's a mid to large size organization, right? If you've got that separate function, it would be up to HR to be on top of that and make sure that everybody is classified properly. But if there are misclassifications, then there are some severe penalties. They've got to pay the back taxes. There could be, interest on top of that. There could be civil penalty. If it was intentional, then there would be even additional, there could be some criminal type of penalties in addition to that. But the motivation for employers is to misclassify employees. Misclassify individuals as independent contractors that really should have been classified as employees. I'm not saying all employers do it. Most employers are fine. But there are a lot of employers, and even large employers out there that really should know better, that misclassify employees, and they get in trouble over it. Because obviously, like I said, there's motivation there to engage in that misclassification. But like I said, it's not up to the employer to decide, you're an independent contractor, you're an employee. Here's what your contract says, we're going to write it out, you're going to sign it, and that's our agreement. That if they put together an agreement like that, it still doesn't matter. It all has to do with the facts and circumstances around the work. Now, they can devise a position, like if they create a position, they could devise it specifically to meet the criteria of an independent contractor. They could do that. That's fine. But they can't just say, if somebody really should be an employee, they can't just say, you're an independent contractor. And that's what we're going to classify you as. So there are these, what are we on time here? Okay. I want to show you, this is kind of handy, and this is here in the daily agenda that I have up for today. I've got some documents that might help as well to go through, take a look at some more details. This checklist is kind of cool. This is put together by the IRS. Now they've got 20 different questions here that all relate to those 6 factors for determining. But how they've got it phrased kind of is helpful. So like profit or loss. Can the worker make a profit or suffer a loss as a result of the work, aside from the money that they earned from the project? So it all revolves around economic risk. Who's taking on the risk? Employers take on the risk for employees. They take on the risk of loss. If there's no money to pay the employee, the employer is going to have to go out and borrow the money in order to pay that employee. They have the risk in that case. For an independent contractor, if they haven't made enough money to, make further investments in their business or to pay their bills, they're the one that has the risk, right? So who has the risk? Investment. Does the worker have an investment in the equipment and facilities used to do the work? So the example of the janitor, if I'm providing my own equipment, I've got my own vacuum cleaner, I've got my own buckets and mops, and I'm getting all of the supplies and everything, then I have made the investment. If, however, I just show up at the location, I use their vacuum cleaner, they've got all the mopping supplies, they've got everything there, then that investment is made by an employer. Okay? Works for more than one firm. Does the person work for more than one company at a time? This tends to indicate independent contractor status, but it's not conclusive because you can be an employee at different places. You can have multiple jobs as an employee, right? But if you are doing one job and you're providing that service, that same service to multiple employers, and if you meet the other definitions or other of those factors, then you're probably an independent contractor. Do you offer your services to the general public? Do I advertise my services, or am I just providing work to one place and I'm not advertising? Let's see. Instructions. Do you have the right to give the worker instructions about when, where, and how they do their work? This shows control. Who has control over how, when, where a worker does their work and how much they're paid for their work? That control. Let's see. What else do I want to say? Integration. So I mentioned that this gives you a little bit a better definition of what I meant by the integration. So are the workers' services so important to your business that they have become a necessary part of the business? So that example of the janitor providing services to the CPA firm, it's not necessary to the business. Is it helpful? Yeah. But again, what we would do is then we would look at, okay, who has control? So even if it's not integral to the business, but I can tell that janitor, I need you to come in at 5 o'clock. I need you to stay until 10 o'clock. This is what I need you to clean. I need you to use the tools that I provide for you to do that. Then altogether, that would appear that they were an employee rather than an independent contractor. So, and what I'm trying to illustrate here is that it's not one factor. It's not one single yes or no answer. It's a whole picture. So it has to do with the entire picture and all of the factors taken together. What else? Work hours. So do you set the workers' hours? Sequence. Do you have the right to determine the order in which the services are performed? This again goes back to control. Who is controlling how the work is done? Pay schedules. Do you pay the worker by the hour, week, or month? Independent contractors are generally paid by the job, or as I said here, by commission. Although there are certain industry practices where they are paid by the hour. Accounting would be one of those industries where, generally speaking, you have billable hours and you bill by the hour when you're doing that. So it's not, not exclusive. Tools and materials. Do you provide the worker with equipment, tools, or materials? Independent contractors generally supply the materials for the job and use their own tools and equipment. So anyway, that's just to kind of go through, gives you a little bit more clarity, hopefully. There's another fact sheet here. This is put together by, and all of these I have links to in the agenda. So this is put together by the Wage and Hour Division of the Department of Labor that gives you some more information about those classifications between employee or independent contractor. Now, this is the classification under the Fair Labor Standards Act. As the video had mentioned, different departments kind of use different rules for how we're classifying people. The IRS has their own set of rules. They all generally fall under this same umbrella, though, of that 6-factor economic reality test. Some states, as I mentioned, New Mexico has clear-cut rules. If it's this, and this, you're an independent contractor. If not, you're an employee. Iowa doesn't have those. So state by state, it may differ as well. And then this is the IRS publication that I've got up there as well for distinction, just a 2-page thing. So it may have helped to just some various ways to kind of help maybe clarify some of that. But just know that it's not clear cut. There's a lot of gray area in making the determination, and sometimes, the wrong determination is made. Sometimes just honestly, the wrong determination is made. But it has to do with taking all those facts and circumstances into play. And again, for our purposes, it's important because we're dealing with employees. We have employees, we're going to have to withhold their taxes. We're going to have to withhold and calculate their Social Security and Medicare tax, and we're going to have to make the payments on their behalf. We're going to have to calculate what our unemployment taxes are. Workers' comp, we don't do so much of that in class, but payroll would generally help with the calculations for workers' comp. We've got to calculate what employee benefits, what's going to be withheld from their paycheck, and what employee benefits they're going to receive. So that's why we need to know this distinction between those classifications. So again, we went through this, but know the difference between the enterprise coverage and individual coverage. And the 4 different ways that the FLSA protects, the FLSA in particular protects employees. All right, I know I kind of went through that fast.